Some encouraging news tonight for potential home buyers. Mortgage rates plunged this week, the biggest one-week drop since last year.
This is actually the second week that rates have decreased after rising for 7 consecutive weeks. Joining us now to break this all down is business and financial journalist Kristen Myers. Take us through these numbers. What are the rates right now?
Right. So at least when we're looking at that 30-year mortgage, which was what a lot of home buyers essentially get, that rate is now at 7.5%, which has declined. Last week it was about 7.76%, and we're at least actually now underneath that 8% level. But while that's encouraging, 7.5% is incredibly high for a lot of homeowners. And if you went and bought a house in 2020 or 2021, you were looking at a 3% interest rate. So I don't know if this feels too much like a victory for a lot of home buyers that are out there right now.
Yeah, what do you tell somebody who's on the fence right now? Is this our moment? Is it going to get higher, lower? What's it feel like?
This is, I think, the #1 question that I get all the time. Should I buy now? And I will always say, listen, if you can actually afford to go into the housing market right now, if you can actually afford that mortgage payment and afford all the costs that are, naturally associated with home ownership, then go and buy. That's totally fine. You have the option to refinance at a later point in time when we do see those mortgage rates drop. However, if you are needing those mortgage rates to drop really to get into the housing market, then this is not the time to jump in and buy just because you can save half a percentage rate. Because again, with 7.5% interest rate, at least on those mortgages, you're still going to be spending a couple $100,000 more than you would have just 2 years ago, as I mentioned, when those interest rates, at least on those mortgages, were like 3–4%.
I think this is why we've seen the rental market, in such demand, because people just can't afford to put the money down and also compete because inventory. Is that also low right now?
Yeah, so this is actually why we've seen this housing market almost stay a little bit stagnant. Anytime we see those mortgage rates drop, home buying demand, really skyrockets because people say, oh, thank God, it's come down a little bit. I can finally get back into that housing market. But again, housing supply has been really, really tight for the last couple of years thanks to COVID, and we have not really seen that abate at all. So right now we're seeing the housing supply be incredibly low. We've seen housing demand be incredibly high, and despite the fact that mortgage rates are high, which usually tampers down demand a little bit, demand is still high. People want to be in a place with a backyard. They want somewhere for their dog to run. People are still working from home. Unfortunately, the demand is still high, and so we're still seeing home prices being elevated here in New York, also in New Jersey. So you're not getting much savings, whether it's on the mortgage rates or on those home prices.
I know you don't have a crystal ball, but what about rates? Do we have any sense that they're going to continue to trend downward?
Okay, so I have at least some good news for you here. In short, yes. They are going to trend downward over the next couple of years. However, if you are hoping that they get back to those, pandemic levels of 3%, 4%, even 5%, you need to keep dreaming, because that is a dream. You're going to be waiting for a very long time. Right now, we're probably going to see them in the 6% range. That's where they're going to be dropping next year. And of course, as time goes on, we are going to see them drop further, but they're going to remain elevated for quite some time.
It's such a hard pill to swallow when just 2 years ago it was so low. It's such a hard pill to swallow. It really is. What about CD rates? They can sometimes mirror similar patterns.
Yeah, so CD rates and mortgage rates are not necessarily tied together, but what makes up that rate, that percentage, is some of the same factors that impact mortgage rates. So as we've seen mortgage rates decline, that is in part due to, for example, Treasury yields. That's a big, thing that's been talked about a lot in the markets. We've seen Treasury yields decline. That's something that is also causing those CD rates as well to decline, as well as those mortgage rates. There's also a lot of other factors in there, a lot of different mathematical equations. But yes, as we see some of those yields decline, as we see some of those mortgage rates decline, you can expect those CD rates also to decline. It is a super safe form of investment. And so when we see the stock market do really, really well, people say, I don't need this very safe investment. I can go with something a little bit riskier because I'm going to make a lot more money there. And so that's why we're seeing some of those CD rates decline as well.
Thanks for the insight, Kristen Myers. Really appreciate it.
Thank you.